Hello everyone and welcome back to our channel. Today we will shine a light on a pressing issue of false house rent allowance claims and the risks they entail. Recently, the tax department exposed several cases of fraudulent HRA claims using PANs of people who are not the real income earners. In many instances, individuals have also falsely claimed deductions for donations made to political parties that actually don't exist or have a genuine presence. With the technological advancement and introduction of new tax regime, it has become easier for the government to plug such fake HRA claims. House rent allowance is a valuable tax exemption for those renting a house, providing significant tax benefits. However, claiming HRA correctly is crucial, requiring documentation such as the landlord's PAN for verification, address proof, bank statement, and rent agreement. If someone gets a tax notice for claiming fake HRA deduction, then he will have to face severe penalty, which will be 200% of the tax and interest at the rate of 1% per month. The claim of HRA exemption requires the employee to submit, among other things, the PAN of the person to whom rent is paid. This is a cross-check mechanism deployed by the tax administration to ensure that the relevant rent income is reported to the PAN of the income earner and is eventually subjected to income tax. The employer and the employee in their respective tax filings are also required to quote the PAN of the landlord as submitted by the employee. Though employers are responsible for conducting reasonable due diligence on the documentation provided by employees, but they are not expected to verify the factual accuracy of every detail. In cases of false claims, employers may face inquiries from the tax administration regarding the verification procedures for legitimate tax exemptions. Therefore, it is essential for employers to enhance their verification processes related to TDS on salaries and tax exemptions to maintain compliance and avoid potential issues. Now let's discuss what to do if one receives a tax notice for claiming fake HRA deduction. If a taxpayer has already received a tax notice, he should re-examine his HRA claim. If the claim is based on valid documents, the taxpayer can provide those documents to the income tax authorities for verification. That's why it is important for taxpayers to keep documents like owner's PAN, rent agreement, and bank statements for at least last 4 years. If the claim is indeed invalid, the taxpayer does not have much of a choice. As a good citizen, the taxpayer should come forward with the discrepancies and pay the differential tax with interest. As we conclude, remember that truthful tax filings are paramount to avoid the perils of tax evasion. Stay informed, stay compliant, and safeguard yourself against the repercussions of false HRA claims. Thank you for tuning in.